Hello, Matthew Bell with InsurancePrescription.com. Today I want to take stock of some of the changes that have been made to the Required Minimum Distribution, or RMD. And in particular, I want to talk about how the coronavirus relief package that has been passed by Congress has affected the RMD. But to get to that point, I'm actually going to go through a series of 12 questions and just kind of walk you through what the required minimum distribution is. So question number one, what is it? In the simplest way, the required minimum distribution is the amount that the Internal Revenue Service, or IRS, forces you to take out of your retirement account when you hit a particular age. Number two, why do they require that you take money out of your account? The answer is that retirement accounts, in the IRS's perspective, are for your retirement. And so, in their opinion, once you hit a particular age, we'll talk about that in just a minute, they are going to say that if you haven't started to take your money out yet, you need to. Part of the reason for this is many retirement accounts, though not all, are funded with pre-tax dollars, meaning that you get a deduction on the amount that you put in, your contribution, and then the money grows tax deferred. So if you have an account like that, where the amount of money inside of that has never been taxed, then the RMD will apply to your account. Question number three, so what retirement accounts does that apply to? These could be anything from employer-sponsored plans to individual retirement accounts. So if it's an employer-sponsored plan, then we're talking about the 401k, the 403b, 457b, and so on. Sometimes you'll also hear words like TSA, or tax sheltered annuity, TSP, or thrift savings plan. On the other hand, they also apply to individual retirement accounts, such as the traditional IRA. In some cases, there are hybrid accounts. These are going to be things that apply in the first place to small business owners, people who are self-employed. They can be built on the chassis of an employer-sponsored plan. They could be, for example, a solo 401k, or it could be built more on the chassis of the individual retirement account. And in that case, you would be talking about things like the Simplified Employee Pension, or the SEP IRA, or the Savings Incentive Match Plan for Employees, also called the Simple IRA. But if the plan has been funded with pre-tax dollars and has deferred growth, then it would be susceptible to an RMD. Number four, are some retirement accounts excluded or excepted from having to take a required minimum distribution? Yes. Chiefly, we're talking about the Roth IRA. Now, a private individual Roth IRA does not have any required minimum distribution at all. If the Roth is within an employer-sponsored plan like a 401k, then there may be a required distribution even if there's no tax. Some people can avoid paying this by rolling the money out or transferring it from the employer-sponsored plan into a Roth IRA. So number five, what is the age? We said that the required minimum distribution was mandated once you hit a certain benchmark in your retirement. Well, prior to the passage of the Setting Every Community Up for Retirement Enhancement Act, or the Secure Act of 2019, prior to that, the required minimum distribution age was 70 and a half. After the Secure Act, that has been bumped to 72. Number six, when do you start having to take the money out? The first time you have to take the money out, it's called the required beginning date, or RBD, and that is defined by the IRS as April the 1st following the year that you turn 72. Number seven, when is the money generally due after the first time you have to take it? Generally, an RMD is required to be taken by December 31st of whatever the tax year is. Number eight, how much do you have to take? So the question of how much you have to take is really a division problem. And what you have is the fair market value of whatever account is susceptible to the RMD divided by a number that is variously referred to as the distribution factor, the life expectancy factor, the RMD divisor, and it's provided by a table called the Uniform Table that the IRS has come up with. So for instance, according to the IRS's table, at the age of 72, your RMD divisor is 25.6. So if you have an account with $100,000 of fair market value as of December the 31st the previous year, then your RMD would be calculated by taking $100,000 and dividing it by 25.6. When you do that math, you simply arrive at the number $3,906.25, and that would be your RMD. Number 9, where do you obtain the information regarding the fair market value, or the FMV, of your account? The answer is the account custodian, or plan sponsor, or trustee, variously called, would in January or February send a statement both to the IRS and to you on a Form 5498. And this form would disclose the amount of the fair market value as of the previous year. Now, the account custodian could be anything from a bank, an insurance company if it's structured like an annuity, but many times it's going to be some kind of a mutual fund company. Some of the main custodians here would be ADP, American Funds, Charles Schwab, Fidelity, Paychex, Prudential, Vanguard, and many others. Number 10, what form do you give to your tax preparer? The form that you give to your tax preparer after you've taken your required minimum distribution will be the 1099-R that you receive from the custodial institution. That form will show the amount that you were distributed, any amount that was withheld, and that is the form that would be used when your tax return is prepared. Question number 11, what is the penalty for not taking the money out that you were supposed to take out? So if you are susceptible to a required minimum distribution and you don't take the requisite amount, there's actually a 50% penalty for the amount that should have been taken out but wasn't. So if you owe $4,000 as your required minimum distribution and you fail to take it, $2,000, 50%, is simply lost as a penalty or an excise tax. And in addition to that, you still owe taxes on the whole thing, so on the whole $4,000. Finally, how has the current pandemic situation changed the required minimum distribution? Well, SARS-CoV-2, also now known as COVID-19, has prompted the U.S. Congress to pass the act known as the Coronavirus Aid, Relief, and Economic Security, or CARES Act. Amongst the many provisions of this act, required minimum distributions have been waived for 2020, and this would apply to defined contribution plans, the employer-sponsored plans, like we already discussed, things like the 401k, 403b, 457b, but it's also going to include individual retirement accounts like the traditional IRA. The waiver of the required minimum distribution for this year, 2020, could be a very good thing, particularly for people who took a heavy hit on their retirement account. So if you were invested in the market and you took a hit recently in terms of the account, then the fair market value from last year is likely to be quite a bit higher than the actual account value now. So even though you have to take the money from the account value as it exists now, it's calculated on the fair market value as of last year. The fact that there is no required minimum distribution this year can be a very good thing. On the other hand, if your retirement account was structured around some kind of a fixed instrument, some kind of a guaranteed rate of return, and you did not take a hit, then you could opt to not take the required minimum distribution, or you could opt to continue to take it. For people who would continue to take the distribution as it was planned, they might think, well, number one, I did not take a hit, and if you think taxes are likely to go up in the future, in the coming years, then you might think that overall you're better off taking the money while the taxes are known and low this year. This would have to be done on a case-by-case basis. Do not construe this as specific advice. If you need advice, you need to talk to a licensed professional in your area. This video has simply been for general informational or entertainment purposes only. But if you found something of use, I ask that you like the video, subscribe to the channel, click the notification bell to be alerted to new content as it becomes available. I thank you so much for joining me today, and I look forward to seeing you again in another video. Stay safe.